Buckle up, investors! It's time for the weekly market rundown. Hey there, market junkies! Blocks and Stocks here, your guide through the wild world of stocks and crypto. It's been another exhilarating week in the financial markets, full of twists and turns that would make even the most seasoned investor break a sweat. But fear not. I'm here to break down all the action, from the soaring highs to the disappointing lows. We'll dive deep into the stock market's performance, explore the biggest winners and losers, and then shift gears to the ever-volatile world of cryptocurrencies. So, grab your coffee, buckle up, and get ready for another exciting edition of the weekly market wrap-up. Let's dive in. The stock market resembled a roller coaster this week, with plenty of ups and downs that kept investors on the edge of their seats. The S&P 500, our benchmark for the overall market, ended the week down slightly by 0.16%, closing at 564.16. The tech-heavy Nasdaq 100 also experienced a minor dip, finishing down 0.04% at 488.08. Meanwhile, the Dow Jones Industrial Average, home to 30 of America's biggest companies, took a slightly larger hit, ending the week down 0.25% at 412.85. So what was behind this week's market jitters? In a word, uncertainty. The ongoing trade talks between the United States and China have kept investors guessing, with the potential for new tariffs looming large. Despite the overall market uncertainty, some companies managed to shine this week, posting impressive gains that left investors cheering. One such winner was Regencell Bioscience, a biotech company focused on developing innovative stem cell therapies. Regencell's stock skyrocketed an incredible 72.65%, closing at $366.01. This surge in investor enthusiasm was driven by, well, we're not entirely sure. There were no major announcements or news events to explain the sudden spike, leaving analysts scratching their heads. Another big winner this week was D-Wave Quantum, a leader in the exciting field of quantum computing. D-Wave stock surged by an impressive 51.23%, closing at $10.42, as investors piled into the company, hoping to capitalize on the growing interest in this revolutionary technology. While some companies celebrated victories, others faced setbacks this week, their stock prices tumbling as investors headed for the exits. One such company was Cleveland-Cliffs, a major iron ore mining company. Cleveland-Cliffs stock took a beating, plummeting 15.78% to close at $7.15. The decline was largely attributed to concerns about falling commodity prices, which put pressure on the entire mining sector. Another company experiencing a tough week was Genpact Limited, a global professional services firm. Genpact's stock slid 15.16% to finish at $42.04, following the release of their quarterly earnings report. While the company's results weren't terrible, they failed to meet the lofty expectations set by Wall Street analysts, leading to a wave of selling. Section 5. Crypto Craze. Bitcoin breaks the $100,000 barrier. Now let's turn our attention to the wild world of cryptocurrencies, where Bitcoin, the king of digital assets, once again stole the show. Bitcoin smashed through the psychologically significant $100,000 mark this week, reaching a high of $103,027 before settling back slightly. This latest surge was fueled by a confluence of factors, including increased institutional adoption, growing mainstream acceptance, and a weakening US dollar. Ethereum, the second largest cryptocurrency, also had a stellar week, rising 5.7% to close at $2,340.38. And let's not forget about Solana, the high-performance blockchain platform that's been making waves in the crypto world. Solana's native token SOL surged an impressive 12% this week, reaching $145 as developers and investors alike flocked to its fast and scalable network. Section 6. What's next for stocks? Trade talks and earnings take center stage. Looking ahead to next week, all eyes will be on the outcome of the US-China trade talks. A breakthrough in negotiations, leading to a reduction in tariffs, could provide a much-needed boost to the market. However, a breakdown in talks, resulting in a new round of tariffs, could send stocks tumbling. In addition to trade talks, investors will be closely watching the upcoming earnings season. Major retailers including Walmart, Target, and Amazon are scheduled to report their quarterly results next week, providing valuable insights into the health of consumer spending, the engine of the U.S. economy. Strong earnings from these retail giants could boost investor confidence and send the market higher. However, disappointing results could fuel fears of an economic slowdown, putting pressure on stocks. Section 7. Crystal Ball Time. My crypto predictions for the week ahead. Now let's gaze into my crystal ball and make some predictions for the cryptocurrency market next week. Bitcoin, after its triumphant surge above $100,000, seems poised to continue its upward trajectory. If the current bullish momentum holds, we could see Bitcoin testing the $110,000 level. Ethereum, buoyed by the continued growth of decentralized finance, or DeFi, and the upcoming Ethereum 2.0 upgrade, also has the potential to reach new all-time highs. I wouldn't be surprised to see Ethereum approaching the $2,500 mark next week. And finally, Cardano, a blockchain platform known for its scientific approach and rigorous development, could also see significant gains. Section 8. Navigating volatility. Keep your portfolio steady amidst the swings. As we've seen this week, the financial markets can be volatile, subject to sudden swings driven by news events, economic data, and even investor sentiment. So, how can you protect your portfolio and your sanity amidst all this volatility? The key is diversification. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes, such as stocks, bonds, and real estate. Within each asset class, diversify further by investing in a variety of sectors and companies. This way, if one investment takes a hit, the others can help cushion the blow. And remember, investing is a long game. Don't panic sell when the market dips. Stay calm, stick to your investment plan, and ride out the volatility. Section 9. That's a wrap. Stay informed and stay invested. That's all for this week's market wrap-up. I hope you found it insightful, entertaining, and maybe even a little bit profitable. Remember, the key to success in the financial markets is to stay informed, stay disciplined, and never stop learning. So, keep reading, keep researching, and keep asking questions. And most importantly, stay invested. The markets may be unpredictable, but over the long term, they tend to reward those who stay the course. Until next time, I'm Jim Cramer, and I'll see you on Mad Money.